Hi, guys. Hope you are all well this Sunday. We've got Sebastian on the line right here. I'm just setting up my phone as we speak. Go ahead and make sure that you can hear me, guys. Is the audio okay? The video, hopefully there's no freezing or a lag. Can you tell me in the chats or the chat stream? And while you're doing that, I'm going to make sure we got Sebastian all queued up. Looks good. Okay. Thank you, SS. I appreciate it. Sounds good. Jasper, thank you. DT, thank you. Cornetta, you. All good. All right. Let the games begin. That's right, Jared. You got it. Okay, cool. So for any of you that want to make sure I see your question, make sure you do a super chat. Sebastian will text that to me in real time. Let me adjust the screen here. Oh, I got my legal pad in there. And do the super chat, and Sebastian will text me in real time, and we will get things going. I think the only announcement I have is just for the email list. If you haven't done that, go ahead and subscribe. About once or twice a week, I do some exclusive content, just some raw unedited videos where I tell you what's on my mind. And just an FYI, we're going to be transferring the website from Wix to WordPress. So it won't happen anytime soon, but maybe in the next couple weeks, and it might be down for 24 hours, but not too big of a deal. I know most of you guys watch me on YouTube anyway. So let's get into these super chats. Looks like we're waiting on the first one. So I will go over to the live stream. Okay. Hey, George Sparky, hola from Costa Rica. Okay, there we go. Sebastian, I got this one, buddy. Okay, so he texted to me. Great. So, Free Thinker, thank you for the super chat. Really enjoy your channel, George. Any thoughts on Eric Townsend's podcast where he implies PHYS is a scam and GLD is fine? That would surprise me. I listen to every single Macro Voices, and I've never heard Eric say that. That would really surprise me because Eric is really good friends with Rick Rule. Implies PHYS is a scam. You sure about that? I don't know. I think you might be getting your signals crossed. That would really, really shock me because I know Eric extremely well, and I've interviewed Rick, and I know Eric knows Rick, and I don't understand that. But I've not heard that. So if you've got any more information, feel free to let us know in the live chat, or you can just email Sebastian at georgegammon.contact@gmail.com. I mean, I own the PHYS. That's what I'm buying while we're on lockdown here until I can buy physical gold. And again, that really surprises me. Carlos, thank you for the super chat. Hi, George. Based on Triffin's paradox. Yes, definitely in play right now. That's for sure. I have two questions. Why is Schiff so against deficits if there is no way out of them? What would be a healthy deficit level for the United States? Well, let me try to address the first question. I mean, just doing the math, you want to make sure that your deficit isn't increasing faster than your GDP. That's where you get into problems. It's just like a business. If your debt is increasing faster than your revenue or your profit, that's not a good thing. Unless you're investing that money, which the government is not investing the money in a way in which they would get a return. I think that ship has sailed a long, long time ago, even with infrastructure spending. As far as the reason Schiff doesn't like them, from what I've read with Schiff's books, and he's got a great point that you have to take it back to Milton Friedman. Let's just do that for starters. So the way a trade deficit should work is it should decrease the value of the currency in the open market, and therefore make the exports more attractive, or make the country like China, who's exporting a lot, if they have a trade surplus, then their currency appreciates, right? And then you have this equilibrium effect. That's the way it should work on paper. Schiff comes in and says, okay, it works great on paper, but now that's not really applicable, because we, the United States, we don't manufacture anything. So since we don't manufacture anything, you're not going to have this equilibrium. And the only thing that's going to happen, to his point, is the more we run a trade deficit, the more we're exporting dollars. And what are the foreign countries doing with those dollars? They're buying U.S. assets. So you get to this point where, of course, it's down the road, but where Americans don't own the United States. All the real estate, all the stocks, all the bonds, the Japanese own them, the Chinese, everyone owns all of our assets, because we're exporting these dollars just so we can consume more of these goods. And what do the countries or the entities outside the U.S. do with the dollar? They buy U.S. assets, whether it's the form of treasuries, equities, you name it. So that's Schiff's point, and he makes a very, very good point. So I hopefully that answers your question. But to take it and put the pieces of the puzzle together, what's a healthy trade deficit? I mean, it depends where you are in the life cycle, but typically I don't know if you're looking at this from an MMT standpoint, kind of, or like how much money does the economy need in order to continue to grow at its maximum capacity, and therefore they need. And when I say money, I'm talking about currency, guys. So how much currency it needs, so you don't have some sort of deflationary. I don't know if that's your question. If it is your question, then again, I just think if you have to run deficits, they shouldn't exceed the revenue or the profit or the tax receipts for a continued period of time. Or obviously you just run into problems there. Your debt to GDP just goes up to a certain point where the only thing you do is inflate it away. Chris, thank you for the super chat. How or why would silver fail, or the SLV fail? I haven't looked into the SLV too much, Chris. I've only looked into the GLD. I've got a couple videos on that. And the thing I don't like about the GLD is the custodian is HSBC. So they're the one basically that's in charge of the gold. I don't really like that. Going back to Rick Rule's deal with Sprott and the PHYS, that the reason I like that because it's held by the Canadian Mint. So they're your counterparty. I'd rather have the Canadian Mint as my counterparty than HSBC. That's for sure. As far as the SLV, I'm not sure who their custodian is. I'd just do a quick Google search on that and find out and see if whomever it is, if you've got a lot of confidence in them. Jonathan, thank you for the super chat. China, along with other countries, bail out the U.S. by buying our bonds. Correct. Who will bail us out now? And how does that play out if we aren't bailed out? Well, Jonathan, I think who is bailing us out now? The Fed. If China's not buying our debt, if Japan's not buying our debt, and I haven't looked at the numbers recently, so I'm not sure if they're a net buyer or seller, they meaning kind of the rest of the world. But even if they're a net seller right now, because they've got to come up with dollar to meet their dollar-denominated debt, my great friend Lynn Alden, if you guys, I'm sure you watched the interview with Lynn and I the other day. It was a fantastic interview. She is just one of the sharpest minds out there for sure. But she's done a lot of homework on this. That yes, they've got a lot of dollar-denominated debt, countries outside the U.S., but they've got a lot of dollar-denominated assets. And they can sell those assets to get the dollars they need. So I think the Fed is now the bailout party, where even if these foreign entities or central banks want to sell their U.S. treasuries, the Fed will buy them. Chin Yao, thank you for the super chat. Hi, George. Other than inflation, what could possibly keep the Fed from reinflating the equity bubble? Inflation is definitely the big one. Chin Yao, you hit the nail on the head there, buddy. Because their tools are low interest rates and money printing. And both of those are completely defeated by 1970s style inflating because they just exacerbate the problem. So it really renders the Fed completely impotent. Other than that, there's cross currents, Chin Yao, excuse me. The Fed is providing liquidity. I think they will buy stock directly. I think they're probably already doing that, kind of wink and nod through the primary dealers with the primary dealer credit facility that we talked about. I've talked about it on a few of my videos lately. I think that's how the Fed can get the equities onto their balance sheet without anyone kind of knowing what they're doing, a smoke and mirrors type thing. But they could just come right out and start buying ETFs, equity ETFs, like the Bank of Japan has. But if you look at the Japanese market, you see that although the BOJ has taken all these assets and put them onto their balance sheet, it really doesn't mean that the assets have gone up, meaning the stock market. If we take this to the conclusion where the Fed owns pretty much the entire market, then the market doesn't trade. If the market doesn't trade, it's not going to go up. Now, of course, it's not going to go down either, but it's just going to, the market ceases to exist. There's just, because no one's selling, you might have a few buyers, but if the Fed's just keeping everything on their balance sheet, there's really no sellers. So I don't, at that point in time, it doesn't reinflate the market. It doesn't do anything because the entire market is on the Fed's balance sheet. Now, when will we get there? I have no idea. I think we're going to be closer to that next year than we are today, or next month than we are this month. But who knows? You can't put a time on any of these things. And then, to your point, if we get a lot of helicopter money and a lot of inflation in the CPI prior to that, then that puts the kibosh on it. Marcos, thank you for the super chat. Hi, George. Do you think, given the lockdowns and job losses because of the cerveza sickness, some companies can go broke while having their stock at all-time highs because of the funny money? Marcos, it goes back to the last question. And typically you'd say, yes, it doesn't matter how much funny money they print because there has to be a buyer in the private sector for the equity, whether it's a primary dealer, hedge fund, financial institution, you name it. Could the Fed go in and just buy up all the equity? Yeah, they could. But see, the company still goes broke. Even if the equity is on the Fed's balance sheet, they still go bust. It's just the equity holders that get wiped out is the Fed instead of retail investors or the private sector, but they still go bust. Now, that said, I think the Fed is just going to bail them out. So if they're going broke, they just go to the Fed and get free money. So they won't go broke. I guess that's how I'd answer the question. I'd say that if the equity is on the Fed's balance sheet, they can still go broke, but they probably won't go broke because before they do, and before they file Chapter 11, Fed will come in and bail them out with one of the 95 programs they have set up to bail out the corporations, either explicitly or implicitly. And if you don't know what I'm talking about, make sure you check out step number 1 of Friday's video. Cody, thank you for the super chat. Hello, George. Keep up the good work. And what is the strategy arguing with a realtor when you know they're asking too much for a property? Thanks. I don't know if the strategy is between I'm assuming you're the buyer, and the realtor, more so the seller. And what I usually do is I go in at a low price. So say they're asking 500, and I would come in at. It all depends on the market. I can come in a lot lower outside the United States because the market's a lot less liquid. But assuming you're in the States, and depending on are we in a 2012 market or are we in a 2019 market? You got to ask yourself that question as well. But say you come in at 450 and you want to see how motivated they are. So if you come in at 450, come down far enough to where you know they're not going to accept the offer. And for that, you've got to start by asking questions. So let me back up a bit, Cody. When you're first looking at the house and you're talking to the seller's agent, you're trying to ask as many questions as you can to mine for information that you can use in the negotiation process. What are those questions? How long has the house or what XYZ property been on the market? Why are they selling? That's probably the most important question you can ask. Why are they selling? And most of the time, the agent probably will give you some type of blow off answer. But every once in a while, especially if you're outside the United States, they'll be like super, like incredibly honest with you. Like they'll say, oh, they're selling because they're in big problems financially. They just got a divorce and they have to sell immediately. All right. that changes my initial offer a little bit right there. So while you're walking around the property, you're not just checking out what you're doing or the property or what you would do to the property in a remodel situation. You're really trying to get as much data on the seller as possible. And then you try to just think through that and say, okay, if I'm going to come at 450, I know they're not going to take that because of XYZ reason. And they're asking 500. And then you wait and see what they come back with. Do they come back with 495? Well, then you probably don't have too much wiggle room there. If they come back at 475, all right, now we're talking. Now we got some wiggle room. So if they come back at 475, I'm at 450. I might go up to 455. I might even go up to 453, maybe 455, because I know they're going to come down. Now, if they just stay firm at 500, you got no shot. You got to come up to their price, or you're just not going to get the deal. You might get it at 490, something like that, but you're not going to get it anywhere close to 450. That's how I work the negotiation. And by the way, Cody, that works with anything. So that's the way I negotiate buying a house. That's the way I negotiate buying a truck. If you guys know, I haven't talked about it lately, but back in the day when I used to flip trucks and made quite a bit of money doing that. It was the same thing. No matter what I've done, where I'm buying something and I'm making money on the buy side, that's how I negotiate things. Sam, thank you for the super chat. Do you think the Fed will actually let the market retest the lows or go lower than the lows, especially in an election year? Worried that I missed the bottom only because of the Fed's manipulation. It's a great point, Sam, but you don't want to worry about missing a bottom or a top. Remember, we're not in that game. If you guys want to use my strategy that I use for my own portfolio, and I try to encourage my family members to do the same. I don't want to look at, is this the top? Is this the bottom? I look at, is it cheap or is it expensive? So I think there are a lot of stocks out there that are still pretty darn cheap. And I know, I mean, I don't like banks any more than you guys do. I mean, I hate to even say it, but there are a couple banks that are getting pretty damn cheap. Not that I'd suggest buying them, but maybe put them on your radar. I just a lot of some of these big banks, and I know their balance sheet is decent, because if you look at the excess reserves they have held at the Fed, I mean, they got 1.5 trillion. That's the last time I talked, or the last time I checked. They probably have a lot more than that now. So, like, how much of that is Wells Fargo? I don't know, but probably a good portion of it. They've got a lot of excess reserves. Their balance sheets are a lot better. And I'm not saying they're good, and I'm not saying they're good companies. I'm not saying I like the management. I'm not saying any of that. But what I am saying is everything in investing, not everything, but a good portion of it is a function of price. So I could look at the most toxic asset on the planet Earth, and it all depends on the price. So, but there's oil stocks that are super cheap. I'd look at certain sectors as opposed to the entire market. To your point, though, is the Fed going to let the market go down? It's these cross currents with how bad at a certain point, no matter how much money the Fed prints to buy and go directly into the market, the market is always going to have the last say. And if the cerveza sickness, let's say we go into this new wave where they open back up, everyone goes back to work, then whoops, shoot, now the growth curve goes exponential again, and we realize that this is not going to be a V-shaped recovery. I think that hammers the market. And I think the Fed can only react. I don't think they're going to front run that. So that could be your opportunity right there, Sam, if you want to look for the entire market as far as the S&P going back to the lows. But to be clear, try not to look at it that way. Try to just look for individual stocks that are cheap right now, regardless of where the S&P is. SS, thank you for the super chat. George, love the show. Bitcoin lacks an extremely important property of money, fungibility. Thoughts on this and why people still overlook this flaw? I don't know that the Bitcoin bulls right now are really preaching that Bitcoin is the next global currency. That would be tough, because just from a logistics standpoint, with the electricity that it needs and the amount of transactions that it can handle per minute is very cumbersome. It's not really meant to be a global currency. I think it's meant to be more of a global store of value. And I'm not saying it is or isn't. I'm saying I think that's what it's meant for. So I don't know that that's even the bull argument. I think the bull argument is more of kind of a digital gold. And in that case, you wouldn't need the type of fungibility. And so that's kind of why I think people are overlooking. I don't know that they're necessarily overlooking it. I just think they're looking at it from a standpoint of a different use case. Marcos, thank you for the super chat. Could you give us your opinion on Tesla? I just think it's wildly overpriced. The stock. I think you've got to differentiate between the cars themselves and the company and the stock price. Ferrari, I think they're a publicly traded company. I think they went public a couple years ago, something like that. I'm a big fan of Ferraris. I've owned Ferraris. I don't own one now, but I have in the past. I love them. I think they're fantastic automobiles. But and I love the brand. I love their history. It's just, what's not to like? But if they were trading at 100 times PE, I would say, listen, I hate the stock. The stock is wildly overpriced, and I wouldn't touch it with a 10-foot pole. That said, I have no problem going out and actually buying a Ferrari. So I think you got to look at Tesla the same way. People get so emotional about Tesla, they conflate all three components. So if you want really in-depth analysis, I would look at Chris, my buddy with Quote the Raven, does a lot more of a deep dive into the micro stuff. But I just look at the stock price, and I look at a company that's been in business for 12 years and has never made a profit. Never. Not one time have they made a profit as far as on an annual basis. And do I want to pay $700 a share for a company that's never made a profit? Like, what is a share price if not, or what is an equity if not just a claim on future profit? Well, if there's no profit right now, for me at the very best, it's a speculation, and it's not paying me to own it. It's not cheap. There's nothing I really like about it at all as far as the share price. Now, if you ask me what I want to take to a quarter-mile track, would I like to take a Model S out there and run it on the quarter mile? Sure. It'd be a blast. I mean, you're looking at nothing can touch it as far as your 0 to 60 foot time there on the quarter mile. And I mean, it's doing the quarter in like 11. Well, that's a fun ride, especially for the price. But again, it's not a stock I want to own. And then also, when you look at the company, you got to say, okay, well, yes, it's an amazing vehicle from an engineering standpoint, but they don't have to make profit. So, could Porsche, could Mercedes, could all these companies, if they just said, listen, I'm going to give you billions and billions and billions and billions of dollars, and you don't have to make a profit for the next 10 years. Let's see what you can do. I think they'd come up with a pretty cool car. But unfortunately, they've got the limitation of actually having to make money. So that's my thoughts on Tesla. Necitos, thank you for the super chat. George, at this point, where's the economy? Where the economy is forecasted with hyperinflation, should consumers pay down their personal credit card debt? Oh, yeah. For sure. You guys just don't get into any consumer debt, guys. Any debt you have that doesn't make you money, don't take it on. And especially with credit card, that's not going to be fixed rate. That's going to be adjustable. You want no part of credit card debt. That's the one thing I agree on with Dave Ramsey is you don't want any credit card debt. Any debt that you take on should increase your purchasing power long term. It should be an investment. You shouldn't take on debt for consumption, in my opinion. Jeremy, thank you for the super chat, my friend. John, thank you for the super chat. Hey, George, thank you for your work. I'm doing refinancing. Should I go with 30-year fixed rate, John? John has asked me 30, 20, 15, and why. 30-year fixed rate because you're just shorting the dollar. And I think that over the next year, 2 years, 3 years, who knows what the dollar is going to do? Is Brent going to be right? Is Luke going to be right? Brent Johnson, Luke Groman. Is Lynn, I think, really has a awesome kind of refined, very well researched view on this as well. Lynn Alden. But I think 10 years down the line, I don't see any way we're not going to have at least double-digit inflation. And if you can lock in an interest rate at, let's say, 3.5, 4%, remember, any inflation we get above that level, John, is going to be a transfer of wealth or purchasing power from the lender to the borrower. And I think you could do well. So I understand that Ramsey and those guys are going to tell you to go with a 15 because you're not paying back as much interest. But I just think they're not seeing the macro picture clearly. And I think that you're going to gain a lot more purchasing power over the long haul, 10 years plus, by doing a 30 fixed rate and then just letting the inflation work to your benefit by paying that loan back with cheaper dollars. Marcos, thank you for the super chat. If the Fed can buy everything just by pressing digits on a computer, can they just make all the debt just disappear? What prevents that from happening? Well, they'd have to buy the debt first, Marcos. And once they buy the debt, yeah, they can make it disappear. Just the good old debt jubilee. Woohoo! But it's kind of one and the same though, Marcus, if we think about it, because if the Fed takes the debt and puts it onto their balance sheet and then just lets the entity, whether it's the government or a corporation, just roll over that debt indefinitely at 0% interest rate, that's basically what they're doing, is making it disappear. So no, nothing prevents it from happening. We know that the Federal Reserve Act was supposed to keep it from happening, but we know that the government nowadays doesn't pay any attention to the Constitution. The Fed doesn't pay any attention to the Federal Reserve Act. That's just that's old school, antiquated thinking, and just unfortunately we're not we're not a country of law anymore. We're just a country of central banks and big governments. Thank you, Mr. Nice Guy. Thank you for the super chat. I borrowed 200 in US, making me pay 2,000 in Colombia. My business will not allow me to pay this back now. Wait a minute here. Let me see. I borrowed 200,000 in USD, which your debt service is $2,000 a month USD in Colombia. My business will not allow me to pay this back. I'm guessing what you're saying is your revenue is in dollars and you can't afford, your revenue is in pesos. And because you're getting hammered on the exchange rate, you can't afford to pay back the debt. And this is Brent Johnson right here. This is exactly why Brent Johnson thinks the dollar is going to 120 on the DXY. Because what you're talking about is just $200,000. This is what's happening with 13 trillion plus dollars with big corporations and central banks outside the United States. As far as your personal situation, I'm thinking about, let me get this straight now. I'm thinking on moving to Colombia and leave the debt here. Oh, I see. You borrowed 2,000. I'm totally confused. I don't know if you live in the United States. I'm borrowed 200 grand in the US. Now is making me pay 2,000 in Colombia. I'm not really following that. I'm thinking of moving to Colombia and leave the debt here. I have dual citizenship. Boy, I really can't answer that question. You're asking me if you should default on the debt. I can't really answer that question for you. I don't know your personal finances. I don't know. I can't answer that for you. Sorry about that, buddy. Kaka Silva, thank you for the super chat. Hi, will this circle ever break that the Fed created? Yes, it will. At the end of the day, the markets are more powerful than the Fed. And they're more powerful than central banks. They're more powerful than the governments. At the end of the day, the market will win. Whether that's 10 years, 20 years, who knows? But this cannot go on forever. It's completely unsustainable. And how do I know that it's unsustainable? Because if it's not unsustainable, that means the Fed can print, or we can just print money and we don't have to worry about producing any goods or services. Why would we produce any goods or services? Why would we produce anything? Why would we get out of bed? when we can just print money and have all the consumption we want. It doesn't work that way. It's never going to work that way. And taking it back to its kind of the most simple way of looking at it, if the Fed can, or if any central bank can just print prosperity, then what are we doing? Why are we getting out of bed? Why are we going to work? Why are we producing any goods and services? So we know that just saying that out loud, you can just put two and two together and say, okay, well, then what goods and services would we have? And if you don't have any goods and services, even if you have trillion, let's say you had $1 trillion in your bank account right now, but you lived in, but there were no goods and services. When you went down to Walmart, there were no goods. When you went to the car dealership, there were no cars. When you went to hire a plumber to fix your sink, there were no services. It's just like you're living on a desert island. Well, if you had $1 trillion on a desert island, it doesn't do you much good. So it all starts with production, productivity, goods and services. Jeremy, thank you for this super chat. In Fed bailout, Wall Street, you outlined 9 programs Fed has at its disposal today. Yeah, keep in mind, operative word there, today. Tomorrow, I'm sure they're going to have 18, or who knows? It's going to continue to grow, that's for sure. To help prop up acquire assets. If Fed could go back to 1929, crash with these programs, would that have changed the outcome? That's a good question. I think it definitely would have changed the outcome of the stock market crash, but I don't know that it would have changed the outcome of what happened in the real economy. Remember, back then, the stock market was much more of a reflection of what was actually going on in the real economy instead of vice versa, where today the real economy is really kind of goes up or down based on what's happening in the financial economy or the stock market, which is obviously completely perverse. I would say that they probably would have propped up the market, but eventually I think you would have still had the depression. Yeah, I think that's my final answer. Very good question, Jeremy. And I think that may even be a video. That would be a great video topic. I should do some research on that and really think that through. But great question. Danny, thank you for the super chat. How do you think Canada will fare during the crash? Are gold and silver mining stocks on the TSX a good option for me, do you think? Well, I don't know your personal situation. I can't really answer that for you, Danny. I can say that right now, I think gold and silver miners are pretty darn cheap. I bought a bunch of gold miners back, I don't know, 3-4 weeks ago. I got lucky and just bought them at the bottom there. And I wasn't trying to buy them at the bottom. They were just super cheap. So I bought them. Especially the silver miners, man. If you get some pure, I don't know if you can get a real good pure play on a silver miner, but based on what the Fed is doing right now and the expansion of the balance sheet, it's at 6-7 trillion. I said, as you guys know, 2 months ago, the Fed was probably taking their balance sheet to 10 plus trillion. And back when I said it 2 months ago, even when I was saying it myself, I felt kind of weird saying it. I'm like, man, should I really put this out there and say the Fed's balance sheet is going to 10 trillion? I actually really thought about it, but then I kept just doing the math, and I'm like, it's got to go to 10 trillion. It has to. And it's easy to say this in retrospect now that the Fed's balance sheet is already at, call it 7 trillion, and it's going up like this. But 2 months ago, the Fed's balance sheet was still at like 4.5 trillion or it maybe even lower. This was back before they started doing all this nonsense. This was back when they were just doing repo. And I can't remember what video it was, but I was talking about how I think the Fed's taking their balance sheet to 10 plus trillion. I was even saying 2030. And I don't, back then I didn't see how they could avoid it. So my point is the Fed's balance sheet's probably going 10 plus, maybe 20, who knows. So in that type of fundamental environment, gold is, the miners are fantastic. Also because the miners' costs are going down substantially, because a lot of their output cost is, or excuse me, their input cost is energy. So with oil under $20 a barrel, that really benefits the miners. Jeff, thank you for the super chat. The Fed actually had problems when they first started their money dump with inability to sell their bonds. Check their last posted minutes. Oh, yeah, I know. You're talking about QT, Jeff, I'd imagine? Yeah, I'm assuming you're talking about QT. And that's why they had to reverse it. And that's why Schiff has been so, I mean, you got to look at what Schiff has said about quantitative easing. He has nailed it. And that was way back when they started QE. He said, if they start this, Mark Faber also nailed this. Both of them said, listen, if they start quantitative easing, they'll never stop. It'll be, what did Schiff say? There'll be more QEs than Rocky movies. And Faber was saying there'd be QE infinity back in 2009, 2010, 2011, 12, when I first got into macro, 2012. So it's just, there's no way they can unwind their balance sheet. And that's something that I think the entire market, all the talking heads, are totally ignoring. They're sitting there talking about the Fed taking their balance sheet and doing all these programs, but nobody, except for just the people in this space, in this alternative media type Austrian libertarian, whatever space we're in right here, the only people that are talking about it is just this group. And what I'm referring to specifically is, how's the Fed going to unwind this? Say they take their balance sheet to 20 or 30 trillion, and people say, oh, that's not inflationary. Okay, even if it's not at that point in time, how, if they do get inflation, how do they unwind that? They can't sell the bonds. Once they buy something, they're not going to be able to sell it. Now, sure, they can sell it for a week or a month, but they to take their balance sheet and cut it down by 50%, there's no way. Think about that. If they had their balance sheet at 30 trillion, they're going to sell $15 trillion worth of assets. There's no way. There's no way that whatever assets they were selling would just totally tank. Now, sure, they could do it slowly, but think about that. So let's just say they have this plan to unwind their $30 trillion balance sheet over the span of the next 10 years. Okay, well, are we not going to have a recession in the next 10 years? We've had them every 4 to 8 years, with the exception of this last period of time. But before that, we had them at least every 8 years through the entire history of the United States. So let's just say they have this 10-year plan. Okay, great. It's like Mike Tyson's quote, right? Where he says, it's everybody's got a plan until they get punched in the face. And it's the exact same thing. The Fed could have this neat and orderly plan to unwind their balance sheet over 10 years very slowly, so it's not affecting the markets. And then bam, they get punched in the face by Mike Tyson, which is in the form of the free market saying, hell no, you're not doing this anymore. And then they've got to just reverse course and start buying again. And then their balance sheet just goes up and up and up. I can't even remember your question. Oh, your question was more of a statement. Yeah. So Jeff, I totally agree. They had problems, and they're not going to be able to unwind the balance sheet. This is the Hotel California. Donnie, thanks for the super chat. Do you think the recent rise in equities is the market pricing in inflation? Why are we moving up so aggressively? It's just standard bear market stuff, Donnie. I don't think there's anything surprising about it. If you look at bear markets going back to, well, all of them for that matter, they don't go straight down. In fact, the rate at which the market tanked was the fastest in history. If you go back to 2009, it took a long time for the market to bottom, and we had a lot of bear market rallies. And same thing in 1929. So, and we're right in the range of a bear market rally. It's just the way these things work. It's a market, and it goes up and down and up and down. It's just kind of, where does it trend? And in my opinion, and of course I could be wrong, I'm some guy that almost flunked out of high school. I've never taken an econ class or a stock class. Oh, I take that back. I took Patrick's options class. So I can't keep saying that anymore, because I did take Patrick's options class. Thank you for those of you who joined me on the live trading session with Patrick. That was a lot of fun. But funny story about that. I'll get back to your question here, Donnie, I promise. But funny story is, this live trading session that I did with Patrick and some of the viewers, this was last Friday, and we we came into the live stream about like 5 minutes early, and Patrick was making some announcements on how he was going into his interactive broker account, and he's going to show us X, Y, and Z. And he said, okay, I'm going to put on some music, and George and I will be right back in 5 minutes, right at 10 o'clock on the nose. And he's like, we generally listen to jazz music. And I said, Patrick, jazz music? I go, dude, you are out of sync with my viewer. I go, throw on some GNR, buddy. And so like not 5 minutes, but a minute later, he comes back on and he put on Guns N' Roses' Welcome to the Jungle. So that was our listening music for while we were there waiting to start the live stream. I thought that was awesome. It was a lot of fun. Everyone on the live stream was like, yeah, GNR. It was awesome. All right, so back to your question here, Donnie. Sorry about that. That's what I'm going to say. It's just a normal bear market rally, and I could be wrong. We could go back to all-time highs and go back into a bull market. But I think the probabilities, looking at past recessions or market crashes, it'll go up and then just come back down. Zenner, thank you for the super chat. Thanks for your insight and absolute education. Thank you for watching, my friend. Marcos, thank you for the super chat. I'm shorting Tesla, actually. See, but I don't know if I'd short it, buddy. It's a dangerous, dangerous, dangerous thing to do. I'm not a real big fan of shorting stock because of, look what happened when it went from 400 to 900. Who would have ever thought it was going to do that? And then, who knows? Maybe the Fed's buying Tesla shares. I would not put it past them. And they might not be buying Tesla shares directly, but who's to say the primary dealers aren't buying Tesla shares? Like the Fed or the government isn't saying to one of the primary dealers, hey, listen, dude, I really need you to do me a favor. This Tesla stock, we need it to go higher. We need a distraction. We need something. We need, who knows why. And the primary dealer says, okay, well, man, I can just go ahead and buy $1 billion worth of Tesla shares, and then I can just give it to the Fed. We got the primary dealer credit facility. Why not? And then win-win. I get the Tesla shares off my balance sheet, so I don't have to worry about taking a haircut. And then I do this political favor for this senator or whatever, and now my kid gets into Harvard. This is the way this stuff works. Honestly, this is not a conspiracy theory. Well, maybe it is. Listen, I've met politicians. These guys and gals, and I haven't met any women politicians, but the politicians I've met are the bottom of the barrel. They have no ethics. They have no morality. It is all just political favors. You got to think about, why would you be a politician? You got to think about that, right? Most likely you're going to be a politician because it's your best source of income. Like, you can't do anything else and make that much money. The free market, you can't provide a good or service to the free market that the free market would value more than the money you can basically extort from as being a politician. So this is the way politics works. So obviously I have no proof of that. I don't want to accuse any bank or any person of doing it. I'm just saying it wouldn't surprise me. So be careful with the Tesla short, or be careful with any short. I would much rather buy puts. And if you don't know what I'm talking about, just watch the series that I did with Patrick, and just buy puts. A lot less risky. Chris, thank you for the super chat. Hi, George. I'm really interested in diversifying my political risk. Okay, like, that's smart, Chris. I'm currently leaning towards South America, the Caribbean. Can you please give a brief overview of what's involved? Welcome to the jungle. Well, Chris, I've got a lot of experience there because I've spent a lot of time in South America. I'm here right now. And of course, I have my residency in Puerto Rico. I don't know your personal situation. I'm assuming you're an American because the super chat's in USD. So I'm going to take that angle. If you've got a business that would be that would work for Act 20 and 20, or Act 20, I think they just changed it to Act 60. But if you've got a business that would qualify for Act 60, I think you should look at Puerto Rico. At least do some research. There's no downside to just doing some homework on it. Just because from a tax standpoint, there is no place on the planet Earth where you get more favorable tax treatment as an American citizen than in Puerto Rico. So that's where I'd look first and foremost. Now, and I don't want to give you any legal advice or anything like that, but from what my people that I hire to have told me is that you don't necessarily have to spend 6 months in Puerto Rico every single year. I think the first year you do, but after that, they might have a setup where you, as long as you don't spend more than 3 months in the United States, you still qualify. And again, that's not advice. I'm not saying that's what it is. I'm saying from what I've heard, that's how it works. So you definitely want to just write that down and do the homework yourself, or ask someone who's qualified to give you that information. But if that's the case, then I think Puerto Rico makes a lot of sense. South America is fantastic. It's all about what you like, Chris. As an example, here in Medellin, where I'm right now, I promise you cannot find a place on the planet Earth that has better weather. You just won't find it. I've been to 40 different countries. Just do a Google search. It's the Valley of Eternal Spring. They call it that for a reason. 80 degrees every day. The weather never changes. It's gorgeous. You've got parrots flying around, literally. The palm trees, bamboo, low humidity, no bugs. The food is incredible. The people are fantastic. And the cost of living is just a fraction of what you would be accustomed to in a developed country. And so you're getting all the upside and none of the downside. So I definitely look into it. I think that's what I'm saying. Oh, so a brief overview of what's involved. Not much. I mean, I think if I was to give you a step-by-step plan, I'd say when we get past the cerveza sickness, just kind of, or right now, do some homework on Google to find out kind of what your top 3 are. And then once we get past the cerveza sickness, hop on a plane, go check them out for a week. See what you like. You may hate Medellin. You may hate Puerto Rico, but you may like Argentina, or you may like Cayman Island. I know Raul's in with Real Vision. He's in Little Cayman. You may like something like that. So I think you've got to go there first and check it out. And once you find a place that you really enjoy, then there's no there's nothing involved. You just hop on a plane with your stuff and you land and just find a realtor to find you a place to rent, get an internet connection, and you're good. That's pretty much all you do. I mean, I was here for, I don't know how long, on and off. I was here on and off since 2015. And I didn't have like an ID or a visa, or I didn't have any of that stuff. I was never here longer than 90 days at a time. And just for whatever reason, every time I came back, they just give me a new stamp. So as far as logistics, I didn't do anything. Now, since I've been here the last year with the TV show and now with the YouTube channel, I had Sebastian hook me up with a proper investment visa. And then I've got I have my Colombian ID, excuse me. But before that, there was nothing. Just get on a plane and show up. TTT, thank you for the super chat. Are you going to try Seresna's gold option collar trade? What are your thoughts? And him saying he's 100% all in gold. He's not 100% all in gold. He's he's kind of saying, if I was 100% all in gold, then I would use options to make sure I'm hedging and I'm not taking on way too much risk. And to be clear, guys, just because I think Patrick is fantastic and he's my number one go-to guy. But for me personally, I look at it a little bit different for my own portfolio, in the sense that I would, what we're talking about, I would only do with 10% of the portfolio that I'm allocating to speculation. So let's just say I had 10% of my portfolio in gold stocks and like miners, and because I thought that was the best speculation, then I could hedge around that with what we were talking about on the live trading session. But I don't, Patrick is not 100% in gold. He's just, for those people, and I get him on the stream all the time, and obviously everyone has to make their own decisions, but I know a lot of people are 100% in gold, and they're just adamant about being 100% precious metals. And if you're one of those people, it's not for me, but I'm more power to you. I think you should look at the way Patrick sets things up to make sure you're not taking on a little bit too much risk there. Dante, thanks for the super chat. Thoughts on silver? Think it's cheap. I think it's cheap. And especially if we get another sell up, but I don't even want to say that, because then it goes back to, are you picking tops and bottoms? And I'm not sure where it is right now, Dante. I'd have to look it up, and I don't want to mess up the live stream. But I think it's cheap. And if you're someone who's just long-term like I am, and when I mean long-term, I see a lot of these gurus on YouTube that say that they're long-term investors, and then they'll talk about how they just bought this and then they just sold it 2 weeks later. That, I don't know. They have a different definition of a long-term investor. When I say I'm a long-term investor, I literally don't sell. Like I just have it. And it's like, I'm almost like getting married to it. Like I don't sell it. Like even the shares that I have in Cyprus that I've talked to you guys about a few times, when I talk about crisis investing and how I did that and had a lot of success with it back in 2013, 14, whenever it was. That's when the Cyprus had their bail-ins. But I've never sold them. Never. And honestly, I've gone years without even looking at my statement to see, have they gone up? Have they gone? I don't know. I just keep them because they're still cheap, and I'm not going to sell them until they get expensive. So my point is, I think that I'm not sure I'd go all in on silver, but if it's cheap, just go ahead and buy it. And then with gold with me, and I'm not looking at gold as a speculation. Now I'm looking at physical for the insurance side of my portfolio, just so I'm clear there, full disclosure. With the physical gold for insurance, I buy that at any price. It's just when I get an extra $100,000, let's say, I just 10,000 of it. It's like paying tithe, right? It's just 10,000, sure, goes over into gold. And right now I can't buy it, so I'm just buying Rick Rule's ETF, the Sprott ETF. Jeremy, thank you for the super chat. In Fed's bailout Wall Street, you outlined 9. Wait a minute here. I think I already read this. Yeah, okay. I already read that one. So, Jeremy, I'm not sure if you didn't hear me, buddy, but if you didn't, make sure that you listen to the recast of this live stream, because I already answered this question about the 1929 crash. A great question. Mr. Nice Guy, thank you for this super sticker, my friend. Jonathan, just wanted to say thank you. I appreciate it, Jonathan. Thank you for taking the time to be on the live stream. I really appreciate every single one of you taking the time out of your schedule to watch the videos, to comment. It really means a lot. I haven't said anything about it, but we're almost at 100,000 subscribers. We've done that in under 9 months of posting videos, and that's from what people tell me, that's unheard of. And obviously we, meaning myself, Sebastian, Thomas, Danny, Kayla, Maria, the whole team that's involved in producing these videos, we really owe it all to you, to the viewers, that yes, it takes time out of our schedule to make the videos, but it takes time out of your schedule to watch the videos. And so we really appreciate all of you, and we value the time that you take, because we know you could be doing other things. Micro Business Media, thank you for the super chat. Scott, thank you for the super chat. Shouldn't junk bond ETFs track the underlying asset in the long run? If the Fed is buying junk ETFs, won't that only prop up the price temporarily? Well, not really, because the liquidity going into the ETF, they've got to buy the underlying asset, which puts in a bid. So they're not totally separate, Scott. Like, I think you're completely compartmentalizing them as though it's kind of just it is just a price as far as the ETF, but they have to hold the underlying asset. And so then there's always a bid, because they're going to be taking that liquidity that the Fed is throwing at them to buy the junk debt. And honestly, Scott, even if that didn't work out and there was a big decoupling there, the Fed would just go in and buy the debt directly. We're always, I see this on CNBC whenever I just happen to tune in real quick, that a lot of these talking heads, I actually see some of the guys on Real Vision as well, they talk about this when they're thinking it through as though the Fed has some sort of rules, and like what they're doing now, we have to make bets on the future based on what they're doing now. And your question is perfect. It illustrates it perfectly, in the sense that we're assuming what the Fed is doing now, they're just going to continue to do. And if they continue to do this, then how is that going to affect the market or asset prices? And what I'm saying in my base case, and I could be wildly wrong, but I think the probabilities are most high that the Fed there are no rules. So if there was a decoupling, they'd say, okay, well, guess we're not buying ETFs anymore. Guess we're just buying the junk bonds themselves. And then they just set up some special purpose vehicle. They do it to the primary dealer. Or we might even get to a point where the frog has been boiled for so long that we as a society are just numb to the Fed just breaking all the rules and doing this money printing that's just taking us off into oblivion. Like we're just like, oh yeah, whatever. I mean, think about how we've become acclimated to it. The Fed is conditioned to us, whether they've done it on purpose or not. But I mean, if you would have gone back 2007 and said, oh, the Fed's going to be printing up $60 billion a month with this thing that they're going to call quantitative easing, we would have said, what? You're crazy. I mean, even Krugman would have said, that's crazy. That's not going to work. It's going to blow up the whole system. It's going to be disaster. We can't let that happen. Well, okay, they go from 60, now they go to 80, then they do the repo market. Now they're up to 700 billion, then they're doing 125 a day. And it gets to the point where we just accept it. And we get conditioned to ignore it. So I think that, I don't know whether the Fed's doing it intentionally or not, but we're going to get to a point that we as a society, now I'm not talking about you guys in the community or guys like Schiff or guys that are really paying attention, but I'm talking about the general public. And I think that the talking heads on CNBC and CNN as well, they're going to get to a point where they just don't care anymore. Like, oh, the Fed's buying stocks directly. Yeah, I know. What are you going to do? Or, oh, they're buying junk debt of Radio Shack. Yeah, that's just what they do. I think I think they're just kind of playing a game right now. It's like smoke and mirrors, this diversionary thing, because the frog just hasn't been boiled to the point where they're just completely going to ignore what we do. But I think we're getting to that point here where they're just going to say, okay, you guys get it. No one cares. We're buying the junk debt directly. Mr. Fusion, thank you for the super chat. Should I pay off my outside U.S. home loan as fast as I can since it has a high interest rate of 9% or hoard cash to buy stocks at a 50% drop? I don't know, Mr. Fusion, if you're talking about a home loan that you have on a rental property where you're cash flow positive, or you're talking about your place of residence. I don't think I can answer that question because I need to have more information. And I'll tell you what I will say is you've got to do the math. You've just got to do the math. And you've got to look at the probabilities of, like, as an example, if we have a huge crash and you can buy Chevron at a 12% dividend yield, maybe that's better. It just so depends on your balance sheet, man, or your P&L. And even if you're an employee, or I'm not talking about your personal P&L or your personal balance sheet, I really can't answer that question. I'm sorry. I'm just going to tell you, you got to do the math. You got to look at the probabilities. Marcos, thank you for the super chat. I think Mike Maloney could be an amazing guest for your podcast. Yes, he would be. I totally agree. If any of you guys know Mike or someone that works for Mike, shoot him an email. I've emailed him, or no, I direct messaged him on Twitter about a month ago. But I don't. He probably doesn't manage his Twitter account, so I need to follow up with him again. But next week I'm gonna reach out to a lot of guys and girls, actually. Once I get past 100,000 subscribers, I think that'll give me a little more clout. That they'll pay a little more attention. It'll be worth their time. One thing I wanted to mention, and I'm gonna put it up on Twitter. Really cool. And let me get your guys' opinion right now. a viewer sent me a little clip the other day of Robert Kiyosaki actually giving me a shout out. Robert Kiyosaki was doing an interview, and the interviewer asked him about how the average people could better prepare for what's going on in the economy. And he said, well, the first thing you could do is go to YouTube. And he said, there's some guys out there that are fantastic. And the first person he mentioned was me. And so I was really, that was kind of surreal because, I've got a lot of respect for Robert. He's an OG. All of us know that. I mean, he's been doing this a long time. He is the OG real estate guy. And, obviously his books are great, Rich Dad, Poor Dad. So I've got nothing but respect for Robert. So when he did that, that was really, really cool. And then I went to Twitter, and Robert is following me on Twitter, and so is his wife. So I was definitely going to reach out to Robert to see if he wanted to do an interview. So how would you guys like that? Tell me in the chat real quick here. Would you guys like to see me do an interview with Robert Kiyosaki? Let's see, Robert. Yeah. Let's see, Buckard got the smiley face. Oh, so. Okay, maybe some of you don't like Robert that much. All right. I think he's fantastic. I really like him. Robert is the reason why I'm here. Okay, cool. Yeah, Robert, for sure. Yes. Mike Maloney. Yes, please. Robert, of course. Sure. Let's go. Yeah, Robert. Yes. Okay. I get it, guys. I got it. Yeah, we definitely want to see Mike Maloney, and we definitely want to see Robert Kiyosaki and Greg Hunter. Yeah, Greg is cool too. Greg is really cool. All right, so I'll and Danielle. Yeah, Danielle would be fantastic, and I've been going back and forth with her on Twitter for a long time. But I think that I need to definitely have more than 100,000 to reach out to Danielle. But she's definitely on my list. Danielle's fantastic. Love Danielle. And Simon Black, for sure. Rickards. You guys, we're all on the same page, guys. Every single person that you're naming right now is exactly who's on my list. So, and Money GPS, I like that guy too. Yeah. All right, guys. Kyle Bass. Yeah, I'd love to interview Kyle, but I don't think that'll happen. Maybe when I get to 1 million subscribers. Maybe when I get to 1 million. All right, guys, let me get back to the super chat here, because I could keep reading your live stream forever. Yeah, Ron Paul, man. Yeah, I got to reach out to Ron Paul. Got to reach out to Ron Paul. Okay, Rjex 570. Thank you for the super chat. Hi, George. I own a lot of commercial property in Greece. Okay. No mortgage on them. How could I hedge my real estate portfolio for a time like this? Have 10% cash in euros on the side. I don't know what you're talking about as far as commercial. Are you like a strip mall? Do you have a hotel? Do you have industrial warehouse? I'm just not sure about commercial. I'd have to know the specific type of commercial. If it was something that was sensitive to the economy, boy. I might try to take my cash out as quickly as I can. I don't know if I'd sell it, and I don't know if it's cash flow positive. I mean, if it's something like a hotel or a bed and breakfast in Greece, I wouldn't be too concerned with that. You might want to hedge your bets by how would I hedge my bets on that? I mean, I don't want to get too technical here. I don't know if I'd really worry about that. If I was going to hedge my bets at all, I would just try to do a cash out. I'd get a line of credit on it and take the cash out just so I had it in my bank. So if I do take a big hit on the equity, I've still got the cash. I don't think I'd get too crazy with it. That's probably how I'd hedge. Actually, you know what? I might even get a little more aggressive. Well, boy, I hesitate to. Let me just tell you what's on my mind. I would assume that Greece is going to take a big hit because of the cerveza sickness and how heavily reliant they are on the tourism business. And that means you might be able to get some properties really cheap. And so I might consider, and I'm not saying do this, I'm saying if it were me, I might consider trying to go to the bank, take out a loan. If you can get a long-term fixed rate loan against the equity you have in the commercial properties, keep that as dry powder. So if you can get some smoking deals on like residential that you could use in like Airbnb or maybe a hotel, I don't know what your business is, but if you get something like that on the cheap, that's in an industry that you know a lot about, I would consider doing that if it were me. Willie, thank you for the super chat. Hello, George. Love the live chats. When this is all over and the economy picks up, do you think the Fed will sell off anything they bought or maintain ownership? I don't think they can sell it off, Willie. It just like I was saying before, because I think the by them selling it off, it'll crush the economy. I think we always have to remember that our economy now, unfortunately, is completely reliant upon the financial economy. It's totally perverse. The tail is wagging the dog, but it is what it is. So if the financial economy suffers, that's going to trickle down, if you will, to the real economy. So the Fed's not going to be able to unwind their balance sheet, because unwinding the balance sheet crushes the financial economy, and then that crushes the real economy. It's not to say that they won't be able to unwind temporarily for maybe a month, 3 months, 6 months, something like that, if the cerveza sickness is in the rearview mirror. And again, I want to be clear, because when you say the economy picks back up, which I think obviously it'll do from where it is now, it can only go up, but I don't know that the economy goes back to the way it was. I think we might be able to go from a depression to a recession, but I think that's probably the best case scenario right now for the next year or two, and just my opinion. I think Schiff has been saying that well, and I agree with him that now I think best case is just going from a depression to a recession. Chatisms, thank you for the super chat. Did I see All Wars Are Banker Wars by Michael Rivero? I did not, Chad, but I mean, how do we have a war without a central bank? Got to think about that. Because in order to go to war, we need a lot of money. If we can't print money, the only way to get the money would be to tax people directly and immediately. So how many wars would we have had if the government has to say, okay, population, middle class, lower class, upper class, however you want to categorize them, we need you guys to kick in $1,000 a month for the next year so we can go to war. How many people are going to say, yeah, let's do it. Let's go right back to Afghanistan. Let's go right back to Iraq. Let's go into Iran. Well, let's do it. Yes, another war. Woohoo! Here's my $1,000. It's reverse MMT. It's reverse UBI, where we pay the government $1,000 a month. How many people would sign up for that? Probably not a lot. So my point is, without a central bank, without something where you could just print money into, or not money, currency into existence, whether it was a central bank or treasury, fixing the supply of currency would eliminate war to a great degree. And I'm not saying it would eliminate 100% of war, but it would dramatically reduce it. One of the many benefits to ending the Fed, assuming they just didn't create some other way to, let me put that a different way. One of the many benefits to limiting the supply of currency. All right, super chat. Thank you. No name, but I appreciate it. Love the show regarding Rick Rule. Regarding Rick Rule's ETF PHYS, do you have to buy it through a specific brokerage to redeem it for physical? It's unclear on Sprott site. I don't know. That's a great question. I don't think so. From what I understand by doing the due diligence I did, is it's totally redeemable. I don't think there's any stipulation to it. And that's another reason why I really like it compared to the GLD. So, and I want to be clear, guys, I'm buying it now because I can't leave my house. I can't get a delivery. I can't get physical gold. But when this is in the rearview mirror, I'll most likely sell my PHYS and then just flip it and buy the gold with it. It's just kind of a placeholder for physical gold right now. Although, who knows? I could have a conversation with Rick and he could tell me why it's the best thing since sliced bread and why I'm not seeing it right. And then maybe I keep some of it. But again, I'm a physical gold guy. Naheem 87. Thank you for the super chat. Hello, George. Thank you for educating us. Could you talk about what you think about renting versus owning when you need to pay 20% down for a mortgage? I think it goes back to my last real estate video, and I'd strongly suggest you check that out. The quick and easy while you're not in the United States. It looks like you're somewhere in Europe. I would watch my last video and just take the concepts from what I was saying, not the specific numbers, because I'm saying the easy way to look at it is if the house is worth over 250,000 US, but you're in a completely different market. So I just try to review that video, understand the concepts, and apply the concepts to your local area to then figure out what the math is where you live. And there's just, but it kind of goes back to an RV ratio to make it quick and easy. If you're not getting a 1% RV ratio, if it's down like 0.4, 0.5, it's better to rent. Just financially, it's better to rent. If you can get an RV ratio of 8.81 over 1, then it's going to be financially better to buy. Assuming that the population isn't shrinking and there's a lot of demographic stuff there as well. But that's just my quick, that's the first thing you should look at. That's the first thing I would look at. SS, thank you for the super chat. Dr. Daniel Kim, hedge fund researcher turned crypto consultant. Great interview guest. Okay, I appreciate that. Looks like you sent us a YouTube link. Larkval, yes, Mike Tyson, the philosopher. That's right. Fergie, thank you for the super chat. I have full position, physical gold, silver, mining stocks. I got savings and income to live. And do I need anything for the foreseeable future? Before I get to this, Fergie, oh yeah, we got a lot of super chats. Whoa, shoot. Holy cow. Okay, no more super chats, guys. Boy, I just noticed that. Yeah, no more super chats, guys. I'm going to be here really late today, which is no problem. No problem. I love talking to you guys. But at a certain point, I got to get some lunch. So, yeah, Sebastian, no more super chats, buddy. But Fergie, let me go back to your question. Okay. Let me focus here again. I have a full position, physical gold, silver. Got it. Mining stocks. I've got savings and income to live. Okay. For the foreseeable future. What is my step number 2? If it were me, well, you know what I'm going to say, Fergie. First of all, I wouldn't have a full position. But if I did have a full position, I would go back and watch the 4-part series I did with Patrick on options. I would feel a lot better if I had an insurance policy against my portfolio of physical gold, silver, and mining stocks. I would just sleep better at night. And I wouldn't mind paying just a 0.5% of my portfolio annually and in insurance to make sure I'm limiting my downside. So, and you can do that through options. Go back and just look at the 4-part series I did with Patrick, and I think that's what I would personally do for step number 2. DJ, thank you for the super chat. Why not risk 1% of the portfolio with 1-year SLV out of the money call options and then roll a couple years? If silver gets to 100, then you could make it 10,000. If you know how to do options, DJ, that I wouldn't risk 1% of my portfolio. I'm not saying that's right or wrong, DJ. It's just not the way I think. I don't look at investing or even speculation as a way to get rich. And I'm not saying it's right or wrong. I'm just telling you guys how I see it. I just see it as a way to gradually increase my purchasing power over time and to maintain my current level of purchasing power. The way I prefer to think about getting rich is by building a business. I think you're going to get your probability of getting rich is a lot better by providing a good and service for people who benefit from that good and service and are willing to pay for the good and service that you're providing for society at large. I think that's a better way to get rich. It's your odds are better than taking a flyer on gold or on silver or the SLV. Once people start to try to get rich and get into that mindset with, oh my gosh, I'm going to buy Bitcoin because I'm going to be rich. I'm going to buy the SLV because I'm going to be rich. Just emotionally, I think that's tough to manage. Even if the probability is high, I think emotionally it's a lot tougher to manage your portfolio. And in the long run, you'll end up, even if SLV goes to 100, you'll end up not going along the entire ride because you're too emotionally committed to your portfolio and the outcome of your portfolio. Because we know that we're not going to wake up tomorrow morning and have the SLV at 100. It doesn't go up in a straight line. So what if it goes to 50 and then goes back down to 30? What do? You're telling me that if you had 100% or even 1%, you had this huge gain that you wouldn't be tempted to cash out? You would. It's because we're all human. So our emotions are our worst enemy, me included. And just the way I set up my portfolio and the way I try to force myself to think, and the way I try to discipline myself is to just completely, or as much as possible, to remove emotion from the equation. And I've got a huge, or it was a huge benefit for me to fall into blackjack back when I did. I started playing blackjack in 2002, maybe 2001, way before I started making any money. And what I learned in blackjack and the discipline I learned, the mental discipline, has helped me in every area of my life. And I can honestly say I don't know that I would have been as successful as an entrepreneur if I wouldn't have learned to play blackjack. And so I don't want to go off on a tangent, which I already have, but it's not just about why wouldn't you do this. From a math standpoint, I think you also have to ask yourself the question from an emotional standpoint and like a human being standpoint. Clark, thank you for these super chats. Watching from India. Whoa, cool. Thank you. I can't wait to go to India. I've been to over 40 countries, haven't been to India. Definitely high on my list. As soon as the cerveza sickness is in the rearview mirror, I need to treat myself and go to India for a while. I'd love to go to India. Got to go there soon. That'll be one of my goals for this year, is to get to India. Thanks for the education. Thanks for watching, my friend. Jonathan, thank you for the super chat. Resident from Huntington Beach. Very cool. I'm getting ahead of myself here, Jonathan. Let me read it here. Residents from Huntington Beach, California, and Long Beach, maybe you're saying, with other states are protesting the stay-at-home order. Do you believe the American protest will grow in size? Impact? Oh, yeah. I didn't know they were doing that, Jonathan. I'll have to check that out on Twitter during lunch. So yes, this will be a big deal, because I think what's going to happen is obviously they're protesting because they can't afford to put food on the table. And this is going to really put MMT and helicopter money into the front and center. And remember on my videos, guys, how a month ago or 2 months ago or whatever, I said, okay, yeah, they're going to come out with MMT, and they came out with the $1,200 check. But now, if you read the news, they're proposing a new bill where it's going to $2,000 a month. You see, once they start this, it's very hard to pull it back in, especially what's going on with the entire economy being on lockdown. And I want to be very clear. Just because the U.S. or the local government opens back up, I don't know that will really mean that people will open back up. It's just because the government says, okay, guys, go back to work. Woohoo! You're free to go to McDonald's now. Go out to the movie theater. Go out to the dance club. Go to the local bar. Are people going to do it? Even if they, on their own free will, they've got the liberty to do so. I don't know. I don't think it just bam goes back to normal. And so the economy is going to really struggle for a long time. And that's why I think the helicopter money is going to be with us for a long time. But yes, I think that people are going to protest. Of course, when people can't put food on the table, they're going to protest. And I think it's just going to quicken the rate of helicopter money. And let me make sure I'm answering your full question here. Impact on the markets. I don't know it's going to have a huge impact on the markets. I think what's going to have a bigger impact on the market is when the government does open back up. And if we haven't reached herd immunity, or if we don't have a vaccine yet and they open up, then once people are back to work for a month or two, even if they're being far more careful, you're going to see the the rate of infection go up, like you're seeing in Japan or Singapore or any of these places. And then it's going to dawn on the entire market that, oh my gosh, this is not a 1 month deal. This is a 1 year deal. And I don't think that's priced into the market. That's when I see the market going down dramatically. Jeff, thank you for the super chat. Consider this my donation to try to get I know exactly who you're talking about. There's no way I can pronounce this guy's name. I'll say Chamath. Palahapitiya, maybe. I like to think that I'm pretty good at pronouncing names because I've traveled to so many different countries. But we'll say Chamath as a guest. He seems to have foresight and resource to bring the alternative news community to the mainstream. Yeah, maybe. I haven't actually thought about that, Jeff, but now that you mention it, I'll definitely put him on the radar for sure. I know exactly what you're talking about. I mean, I see him on CNBC all the time. XRP, Bull on the Moon. Thank you for the super chat. Who is John Galt? That's right, my friend. That's right. Boy, if you've read Atlas Shrugged or you saw their attempt at making the movies, boy, doesn't it look like today? I mean, it's reality. It's reality. Atlas Shrugged is now just it's not fiction anymore, unfortunately. The 20 is for Sebastian. Okay, Sebastian, make a note of that. I owe you $20. Keep up the good work. Thank you, XRP Bull on the Moon. Appreciate it. David, thank you for the super chat. Fidelity has mutual funds having their primary investment in repo agreements. Repo agreements. Is this ultra safe? I think what you're talking about, David, and I could be wrong, but I think you're talking about a money market mutual fund. And it is very true. Money market mutual funds are big players in the repo market, for sure. I think that's kind of what you're saying, is that they're taking investor money, they meaning the money market mutual funds, and they're going into the repo market with the money. So is that safe? I don't know what your definition of ultra safe is. If I'd say, David, would you lend your money to HSBC? Would that be ultra safe? Probably not. I know the Fed most likely backstops everything. I've been saying it the whole live stream, but I don't know. I just wouldn't want my money in any of these financial products. I don't want my money in that. I don't want my money in the financial system. I really don't. The only reason I don't mind like stocks is because, I mean, it's still in the financial system, but you're buying equity. It's like buying a business. I just don't like these mutual funds or CDs or I don't like any of that stuff. So me personally, I wouldn't do it. I'm not saying it's not right for you, but it's definitely not ultra safe. That's for sure. Andres, thank you for the super chat. Trying to create an inflation-proof portfolio. Okay, are commodity funds and small pieces of land a good idea? Can you elaborate on how to invest in the shelter? I think commodities are cheap. I don't know about the funds. I think they're a great way to hedge against inflation. I would strongly suggest listening to the last Macro Voices episode with Chris Cole. I used a clip from that video or from that episode on Friday's video. Just an awesome episode. And Chris talks about using commodities, trend following on commodities to hedge inflation, and it worked well in the 70s. So I think you're definitely on the right track. As far as a small piece of land, I don't know if I like that for an investment. I like it to live just so I can grow my own food, and I have more control over that. I mean, I haven't been able to eat a stupid vegetable in 3 weeks because I've been in lockdown in this damn apartment, and I can't really get vegetables. So I've just been eating like canned goods. It sucks. But so I like a small piece of land for that. But the thing I don't like about land is it doesn't throw off cash flow. And I don't like to buy things unless, as far as investments, unless they pay me to own it. So if it's a piece of land with like a farm that produces income, or something you could like Airbnb, if it's got a house on it, then it could be a good investment, or I'd consider it. Definitely would be a hedge against inflation potentially. Can I elaborate on how to invest in shelter? So when I talk about shelter, food, energy, and shelter, that's kind of my theme of the last month since we've been dealing with the cerveza sickness. When I talk about shelter, I'm just taking it down to the basics. So when you're looking at a rental property, you're just asking yourself, or you're looking at a property to buy, you're asking yourself, am I buying shelter or is it something more? And if it's something more than just shelter, I don't think you're going to be compensated very well for the investment. So as a real life example, if you look at a 10,000 square foot house anywhere on the planet, is that more than shelter? Yeah, probably. So I don't think you're going to get paid for the 9,000 square feet that is above and beyond the main purpose. So I'd rather buy a $100,000 house that is pretty much exclusively just shelter, or maybe if you can house hack a triplex or just an apartment or something just basic. That's what I mean. But I'm not saying that that's a fantastic investment right now. I'm just saying I think that's going to work a lot better than all of the bells and whistles. And I don't think you're going to get paid for any of the bells and whistles moving forward. So that's kind of how I'm looking at it. Jonas, thank you for the super chat. Appreciate it. Let's see. Okay, no question. All right, appreciate it, my friend. Jeff, thank you for the super chat. Appreciate your work. I'm watching oil, thinking of buying USO. Do you think it's a good buy, and what percentage should I invest in? My liquid assets are 100% cash, and I own my home outright. Zero debt. Good for you, Jeff. All right, buddy. Awesome, man. Awesome. Like to see that. You're in a great financial position to take advantage of a downturn. I don't really like USO. I think it's a lot riskier than you think because of the term structure of the oil future markets. And I am by no means a professional at all, but my buddy Eric Townsend is a professional. And on the last episode of Macro Voices, I think it's the one where he talked to Chris Cole. So definitely check that out. Eric outlines why that's not as good of a bet as you think, because you've got to roll over it's something to do with rolling over the futures contract, and there's a big charge to doing that. So when you're rolling it over, you're not benefiting as much. And when I say you, I'm talking about the fund. So I actually like the oil producers better than I like USO right now. Back when the market crashed, I don't know, was it 3-4 weeks ago, something like that? I bought Exxon, I bought Shell, Dutch Shell, because they were just paying these giant dividends. And I like that better than USO. And I can't articulate the reason as well as Eric can, because I'm not a pro. So definitely go check out the last episode of Macro Voices with Chris Cole, Jeff, and Eric explains it perfectly. M. Montgomery, thank you for the super chat. Nice to catch you on a live stream. Thanks for your great content and work. Stay strong. I appreciate it. Thank you very much. Looks like you're calling or you're watching from the UK. M. Montgomery, I appreciate your time. Appreciate you tuning in. Jonas, thank you for the super chat. Silver Miners. Sitcamo Silver OY. Never closed for COVID, okay? All agree macro fundamentals, etc. However, what says we're not getting screwed again? Oh boy. Let me try to figure out what you're saying here. Boy, I'm not sure I'm following your question, Jonas. I apologize. I think you're kind of making a statement, and then you're asking me what's to say we're not going to get screwed again. I mean, if you're talking about the Fed, I think we're grabbing our ankles right now, buddy. I think we're getting screwed as we speak, and we're going to continue to get screwed. As far as the average Joe and Jane, there's no free lunch. There's unintended consequences to what the Fed is doing. At the very least, our economy is going to be more centrally planned moving forward than it was even 2 months ago. That's at the very least. So more central planning. If you watched my video Friday, which I'd strongly encourage you to do, more central planning means less efficiency. Less efficiency in the economy means worse jobs, less of a dynamic economy means fewer opportunities for everyone. And that's how I think we're getting screwed. Not to mention the fact that the currency is going to devalue. I think short term, that's how we're getting screwed. Long term, it's all about the currency being devalued and that creating even bigger chaos or more chaos than the cerveza sickness. Tom Lee, keep the faith, brother. You got it, Tom. I'm definitely keeping the faith. I always, it sounds funny, but I always enjoy life and I always keep a smile. I like to laugh about it. As most of you guys know, I just like being informed and I like making sure that I'm cognizant and aware of what's going on around me at all times so I can make as good a decision for my own financial future and the future of my family as I possibly can. It's not about losing sleep or just getting kind of bummed out. It's just about being well informed. Farrell, thank you for the super chat. Thank you, George and Sebastian. You got it. It's great to spend some time with you. My son knows you, George. He knows me? He calls you the smart man. Oh, okay, I see. He knows me from the YouTube videos. Yeah, the smart man. Tell your son it's all about the editors. It's all about the editors. We love you. Thanks again. Thank you, Farrell. Thank your son for watching. And tell him that he's a very smart man for watching my videos. That's right. Chatism, thanks for the super chat. Okay, I think we got to that one, Sebastian. Martin, thank you for the super chat. Have you thought about other metals other than gold and silver? I have not, Martin, because it takes me so much time to do the research I already do for the videos that I really just have had time to go into gold and silver. I'm not saying there aren't better opportunities in other metals. I think that how I do this is I just don't have time to do everything. You guys got to keep in mind, I've got a whole real estate investment business, as I don't know if you want to call it business, but I do a lot of real estate investing as well, in addition to the YouTube channel. And I got a lot of things that I juggle. But what I do for this is I just kind of subcontract this out to my buddy Chris McIntosh, and he's with Capitalist Exploits. They have a newsletter called Insider, which I read religiously. And Chris goes into all of the details. He does the homework for me, and I trust him implicitly. So I don't know too much about anything outside of gold and silver. If I were you, I would check out what Chris does. If you think it's a good fit, we have an affiliate link. You can go through our affiliate link and get a 15% discount. It's on our website at georgegammon.com. You can go to the recommended resources tab, click on newsletter. I'd probably start there. And even if you don't think that's right for you, I think if you go to Chris's website at capitalistexploits.com, they've got like a free, like a weekly thing or something that's like free. And then maybe check it out that way. And then if you're really interested, then you can go ahead and make the full purchase of the resource or the research letter. But that's how I do it, because I don't have time to take a deep dive into all of the opportunities that are available. So I just read Chris's newsletter. James, thank you for the super chat. How do you invest in shelter? Cheap real estate. Yeah, again, James, it's all about just kind of a basic single family home or an apartment or a triplex. Nothing fancy, just a roof over your head in a great neighborhood where people are going to want to live in that neighborhood for the long term. But you got to make sure that you're making your money on the buy side. So I'm not saying to run out right now and buy real estate at the right price. Yes. But you got to make sure that it's got to be a smoking deal right now, because in the next year, we could see real estate prices go down. I'm not saying it's going to crash by 50% in the next year, because that's a slow moving. Real estate doesn't just happen overnight. But if unless you can find a great deal right now, I'd be patient. David, thank you for the super chat. When the Fed creates these lending facilities or special purpose vehicles, does that create broad money, or does it only create reserves for the commercial bank? That's a great question. That's a fantastic question. So it's creating broad money, David, because, well, it depends. It depends. It depends who the seller is, David. Because let's say they set up a special purpose vehicle. So that's just an LLC or a corporation, whatever, just an entity to buy, let's just say shares of or equities, to make the example simple. So they're buying Apple stock. Okay. Well, who are they buying the Apple stock from? If they're buying the Apple stock from you, the individual, then yes, it would be increasing broad money, because it's creating an additional deposit in the retail banking system. If they're buying those Apple shares from Goldman Sachs, it would not increase broad money, because the Fed would simply make a deposit into their reserve account that is the Goldman Sachs bank account they have at the Fed. So they would just be creating additional reserves. So you have to ask yourself the question, who's the buyer? Or I'm sorry, who's the seller? And that answers the question as to whether or not the transaction is going to create more broad money or just more base money. Marcos, thank you for the super chat. Most of the guys you mentioned are really interested in letting people know what is happening. I think if you reach out to them, you'll be surprised by the response. Call them and they will come. Yeah, I think so too, Marcus. Everyone's been really super cool that I've reached out to. And I mean, Schiff was on. He was fantastic. And we're definitely going to do more of these interviews. I mean, there's so many people I want to interview and talk to, and I try to mix it up. I had Miles Beckler on the other day, who's just an internet pro, and he's someone I've learned a lot from. And I have people like Lynn and Jason Burrick from Wall Street for Main Street. If you guys haven't seen that interview we put out yesterday, make sure you check that out. That was really, really awesome. But for sure, I definitely want to keep doing the interviews and just talk to as many people as I can. And I'm not afraid to reach out to people. Trust me on that one. Mr. Sosa, thank you for the super chat. What percentage of your portfolio should be in gold and Bitcoin? Best way to buy gold through ETF. Okay. For me personally, I like 10% of my portfolio in physical gold for insurance, because I compartmentalize my portfolio into three categories: insurance, investment, speculation. Investment has to pay me to own it. Speculation, I'm only buying it because I think the price is going to go up. So with Bitcoin, it would be a speculation. So it would be no more than 10% of my portfolio. Personally, I wouldn't even do that. But I'm not saying it's right or wrong, but I would, if I'm giving you a suggestion, I would say definitely not more than 10%. If you're asking me what's the best ETF to buy gold, I've been doing it through Rick Rules, through Sprott, and that's the PHYS is the ticker. I'm not saying that's right for you. I'm just saying that's what I've been doing. I like it because I trust Rick, and because just doing the due diligence, it's redeemable for gold, and it's your counterparty there. It looks like it's the Canadian Mint as opposed to HSBC. HJ Kane, thank you for the super chat. Will Square and PayPal hurt traditional banking system from the bottom up, especially now? Will Square's Cash app adding Bitcoin help mainstream? Well, it definitely can't hurt, that's for sure. Whenever Square or PayPal, whenever they do anything with Bitcoin, just gives it more exposure. That's definitely good for Bitcoin. As far as hurting traditional banking system, I don't really think so, buddy, because you've got to understand that the traditional banking system isn't what it was back in the 1980s. The big banks, and I'm talking your Wells Fargo, your Chase, your Bank of America, your big retail banks, they don't make money on lending anymore. That's not, they make money by facilitating loans. They make money by executing new loans, because they don't keep the loans on their balance sheet, right? So let me take you to the process really quick here. So if you go down to your local Wells Fargo for a car loan or a home loan, they're going to say, okay, Mr. Kane, here is your $500,000 to buy yourself a home. And you're going to say, great. And you're going to sign on the dotted line. Before the ink is dry, the loan is sold to Fannie and Freddie, or someone that's going to package it into MBS, mortgage-backed sausage. They're going to sausageify it. And then they're going to pawn it off on Wall Street. Wall Street's going to sell it to a pension fund or whatever. And even if you're making your payments to Wells Fargo, that they're just the servicer. So they're making money on an origination fee. They're not making money by holding it on their balance sheet. So I don't think PayPal is a competitor at all for the banks, because that's not how they're making money. They're not making money on having more of your checking account. It's just not the way the banking system works now. Now, there are very small banks, community banks, that do keep the the debt or the loans on their books. And that is more of a traditional banking system. But again, I don't think PayPal is really competing with them. All right, guys, that is it. I appreciate it. The super chats are up. 2 hours on the note. Oh, that's cool. Yeah, boy, that time really flew. I hope you guys had a good time. I sure enjoy the super chats. So I'm going to do some shout outs here before we go, just to thank people for staying on until the very end. We've got Kelly, Kevin Kelly, thank you. Valerie, thank you. Tom, thank you. Atlas, thank you. Phil, thank you. Sparky, thank you. Who else did I miss? Glenn, Flying Dutchman, Valerie, Glenn, Jared, Quan. Hopefully I'm pronouncing that correctly. Ona Malia. Hopefully I'm getting that right. Thank you. William, thank you. June, Jurgen, Rickard, Deepak, Isaac, Chris. Let's see how fast I can read these. Boston, Ken, Grim, Deepak, David, Tom, Isaac, Kenroy, Jackie, Chris, Tim, Dan, Dave, Frankie, Tom, Ricardo. All right, guys, enjoy your afternoon. I'm going to go grab some lunch, and I will see you on the next video.